Recently, I've been reading a book, a little known book. It's tiny and obscure. Most people have never heard of it. It's called Atlas Shrugged. Now, obviously, this is a book that I should have read a long time ago. I just personally struggle with reading fiction. It's just very difficult for me to force my way through a fiction book. But Atlas Shrugged has been something that's been on my list for a long time, and I'm very much enjoying it right now. And what struck me as it's kind of odd about this book is that I think it is probably one of those books where anybody who reads it will agree with the philosophies and the truths and the opinions put forward. The only difference in opinion is from who people think the villains are versus the heroes. And right now, we have in the United States policymakers who are introducing bills aimed to limit the number of houses that investors can buy. Now, the reason I brought up Atlas Shrugged, if you've never read it, there's a push in the beginning of the story where they're saying, hey, look, competition is essential for a thriving economy. So in order to make sure that we have competition, we must limit the amount of wealth or the number of companies or the size of company that somebody can have. And when I saw this article that there's a bill being introduced to limit the number of houses that investors can buy, it immediately reminded me of this story in Atlas Shrugged, because this is essentially what's going on here. You have a victim and an oppressor story narrative being pushed on people and saying, hey, look, if we really want a thriving economy for all, we have to introduce regulation that prohibits individuals from doing something that they want to do because they know it's in their best interest. And that's exactly what happens when a real estate transaction takes place. Me as a seller, you as a buyer. We are free individuals to make up our own minds about what kind of goals we want to pursue in our life. If you and I shake hands and decide that you want something from me, let's say a house, and I want something from you, like money, and we decide on the proper amount and we shake hands and we make that exchange, who has the right to stop us? Nobody. That is between me and you only. And there is zero difference between that and an investor buying a house, no matter how many houses an investor has. It is simply immoral for anybody else as a third party to step into that transaction and for any reason say, no, you are not allowed to do that. Two parties freely making up their own mind about an exchange should be able to do that no matter what, regardless of the wealth or lack of wealth situation of either party. Freedom to choose is the foundation for a moral and a thriving society. And by the way, if you're struggling to see with how you can protect your investments against a crash, inflation, deflation, eroding your purchasing power, seeing everything go down in price, you don't know how to protect your assets, you need to get my portfolio allocation course. It is linked in the description below, and it's 50% off for you for the holidays. Now, when you look at this article, it talks specifically about Atlanta. And this is important because there is no real estate market. There are many real estate markets around the entire United States. And Atlanta has a feature where it is a little bit unique compared to most other real estate markets, where investors recently in the past few years have been buying 1 out of every 3 houses that come up for sale. And so city council members are calling this a housing crisis. And even now that real estate has slowed down, investors are still responsible for purchasing 1 in 4 homes sold. Now, do I personally, as an outside viewer, look at this and think this is great for everybody in Atlanta? Well, maybe. I would definitely see the arguments for people saying it's not good, and fine. People can have that discussion. But that discussion is actually irrelevant because investors buying up homes around a neighborhood or a city or a state is not a root issue. It is a symptom. A symptom of what? It is a symptom of the over-regulated and over-subsidized real estate market that we have today. What I call the regulatory roller coaster to tyranny, because as governments move forward and deal with crises and problems, the only tool they have is laws. And so they come into something that they see as a problem and they put a law to stop it. But that causes some sort of a crash or a collapse. So then they have to come in and subsidize it so that it stops collapsing. Well, that subsidy breeds either fraud or loose money or an ability for certain people to get rich off of it, which pushes things back up. And then people get upset about that. So they clamp down with more regulation. And you get this flip-flopping cycle between regulation and subsidy until you're just in pure tyranny where the government controls everything. That's what's happened to the financial industry, the medical industry, and it's increasingly been happening in real estate. And the root cause of this is the fact that governments have unlimited spending power through the money printer. Otherwise, they wouldn't be able to afford all these increasing regulations and enforcing them, and then all the increasing subsidies in order to rescue the things that they caused to fail through their additional regulations. So you might be asking, well, what sort of subsidies are we talking about here, and what sort of regulations are we talking about here? Well, for starters, how about zoning laws that make it extremely difficult to build small, cheap, affordable housing at a profit? This means that in many places around the country, we don't have enough homes being built, so there's scarcity. When there's scarcity, that means that investors, people who want to make money, look at that and say, that's scarce. If I buy it, then I'm buying something that can cash flow that I don't have a bunch of competition from. Therefore, I'm going to buy it so that I can profit. That would be solved if you just built way more houses, because then people would buy them to use them because they want to have somewhere to live, but there wouldn't be as much of an incentive for investors to buy them because they know that that's going to hurt their prospects to make money long term. And how about number two, low interest rates, and the fact that in this interest rate environment, the over-financialized environment that we have today, where the larger you are, the more access you have to capital, capital markets, cheap debt, that means that you can come in and offer a way better price than most other people can because you can afford it. The bigger you are, the more access to money you have. This is something that is a symptom of a fiat money system. This is not something that's just built into nature. This is why so many small businesses have been going out of business for the last few years, because they didn't have access to the amount of capital and the amount of subsidies and the low credit that large corporations had through public markets and public debt markets, which, by the way, were directly subsidized by the Federal Reserve by buying this debt and keeping those interest rates low to allow them to continue to roll over their leverage, something that was not available to the small mom and pop. And so if we really want to get to the core issue of this, we need to attack things at the federal level, the most centralized level. We don't need to push new regulations up there. We need to get rid of them, allow failure to fail, stop the subsidies, and stop the increasing regulation before we get to tyranny. Now, finally, what this means for the housing market, that again, this is one of the things that I say the most that most people disagree with me on, is that there's no crash coming anytime soon. Do you really think that all these hedge funds, all these large investors, all these corporations bought up all these homes for the last couple of years, and some of them in some places, there are multiple real estate markets, are still buying up homes? Do you think they did this and are just going to be okay with the real estate market crashing anytime soon? Absolutely not. If there was any chance of that, if they were looking at the supply and demand dynamics and thought, oh yeah, there's about to be a huge flood of homes onto the market, do you think they would have been buying up neighborhoods left and right over the past few years? And let's say they were wrong. And let's say that for the first time in history, all these investors and large corporations piling in to buy single family homes all around the nation, doing it because they were just wrong and bought into this euphoria. Do you really think that if things start to crash, they're just going to let all these other homes sell at lower and lower and lower crazy low prices and let everything crash and hurt the value of their portfolio? Or do you think they're going to start buying up some of these when they're on sale and when they're a good deal again, which would stop the crash from happening? So we'll see. All these billions of dollars that are buying up homes from corporations, investors left and right over the last couple of years could be wrong. But as far as I'm concerned, there is nothing that convinces me that this practice should be outlawed, because fundamentally there is no difference from an investor buying a home or you buying a home. And no third party should have the right to come in and tell you you can't do that when you want to do it because you know it's in your best interest. And if we really want to level the playing field, we would end the Fed and deregulate. As always, really appreciate you guys. Thank you so much for watching. Have a great day.